Good evening. Ira Epstein of Linn & Associates with your Wednesday evening, and this is May 26, 2021, metal market wrap-up, and this is for the time of what, 6:45 p.m.? All right, if we're looking, we're starting to see a bit of a correction hit the metals. Now, tomorrow's the last full day of trading, or not really. I think first notice day is Friday in gold. So you want to start thinking of coming out of the June gold, either rolling to the August, standing back, your choice as to what you're going to be doing. I'll tell my subscribers tonight what I want them to do and when I want them to do it. Down a little bit also if you take a look in the stock indices. Bonds and notes, though, very stable, fairly stable in the energy markets as well. It's time to swing over to the June Bitcoin, get away from the Mays now, so look at that one also for things. We're also going to be coming out of the June currencies very shortly. There'll be a big roll of everything as we get out of all that. And remember, there's a big roll for you tomorrow. What do I mean by that? I will be holding tomorrow, Thursday, at 12:30 p.m. Central Time, our first What's Up, where we deal with chart analysis. You ask the question, hey, what's up with that chart? And that's how we're going to go with it. It is not about asking me how to work with Bollinger Bands and slow stochastics. We'll do other webinars for that. This is your questions on individual futures, stocks, spiders, ETFs. Follow this link right here. Click on it. It'll take you right to what you have to do to sign up. We're already quite full. There are some seats available, so first come, first serve when we get there. A lot of people sign up and don't show at the last minute, and they'll get knocked out. I will open the webinar at probably 12:15, 12:20. You can ask what you've got right away. You can write me the questions, and as I get them, I'm going to create charts, and we'll jump on them, and I'll do as many as I can in a 15, 20-minute segment, and that's it. This will not be published on the website. I want to create this where you come to it, you make the time, you don't get to participate. Pretty simple, right? All right. So as we look at the gold market, again, we're up for the week about 1%. Market's looking good, but we're in an area where the market stuck its head way up and fell back a bit today. The pattern is still bullish as we've got the straight pattern of higher lows, higher highs. The market, as I told you, look for a bullish crossover. It's coming soon, I think, with the 18-day average getting ready to go over the 200. That's a bullish crossover. It's not as ideal as if it were the 100-day and then the 200 were here. Then you'd have everything lined up very, very bullish, but it's still a bullish crossover. As for the resistance point, it's the Bollinger Band, but I wrote my subscribers, and I'll share it with you, that the window envelope that I've been putting out is acting as a better resistance point once you got away from this than up here. And that's what I've been telling them to use. You have to be a subscriber to see those, and you get all my window envelopes with your subscription to any one of my videos for the morning or the research. So you get what you need to work with it, and you just get to see them on the bottom of the charts anyway, so you don't need a special page. When you look at the slow stochastic, it is still embedded, but I want you to get ready to say goodbye to June gold. We're going to be moving into the August very shortly. Certainly by the weekend I will be there, so you pay attention to that. Then we're looking at gold versus silver, and very shortly here it'll have to be August gold versus July silver. And it is still with the point where the number is over the 18-day average, which means gold is stronger than silver. As gold keeps climbing, you need more ounces of silver to get an ounce of gold. You see that in the July silver is first thing that's different. You don't have an embedded reading. You've been coming down in momentum. You have a pattern here of a lower low, then a higher high. It's not a real pretty looking chart. You're keeping the bias up, but you're not getting an uptrend to develop. In the copper market, you're oversold. You've come down. I don't know if you'll make it to that lower Bollinger Band or not. You don't have to because you're so oversold. And again, oversold conditions that are not embedded do not attract new short selling often. That's at least what I believe. Doesn't mean I'm right, but that's my belief. If it does, lower Bollinger Band. If you can get up and over this high that we made on Tuesday, that would be a good signal that the market has run its decline and it's through with that leg. Doesn't mean it's ready to start an up leg. What's the common element that happened in all these metals except gold? It's that China put out the kibosh in the banks and to the retail person that they don't want them speculating in copper, palladium, platinum, iron ore, rebar. It goes on and on. They don't want the cost of their goods going up, so they're trying to stop it. Unlike in America, they can do that. You know, they issue an edict, that's the end of the game. The banker that doesn't follow it, he's somewhere in their vast region probably planting whatever he's planting, but it's not a good move. In the palladium, you've rallied enough to take out this high, so you've ended this decline, and that's no surprise. Generally, the combination of a major moving average and the lower Bollinger Band come together to do those type of moves, so that's what you've got, but you haven't begun a trend. You ended a downtrend, but you haven't begun a new leg one way or the other. The palladium is still in the down leg. You see that here with the momentum. You see how it keeps going, and the market keeps hitting the lower Bollinger Band. That's that Gorilla Glue thing where you get on the left side, then the right side, and each day you just keep hitting it. I had one of my subscribers write me today trying to explain what he thought in a stock was that. He doesn't get it. And, you know, that's something that he's got to master as to what that really is. It means you're hitting it every day. You didn't back off to the right or left. You just keep hitting it, and you close under it, over it, and back and forth. And this market is still doing that pretty much. Dollar index. Well, the dollar index lost its embedded reading today, so that is important. Now, I thought this market would hold on better than that. Unless it gains it right back, I think it's time to walk away then from that dollar index short, from the bears that are in there, and you're probably going back to that 18-day average to refigure what's going on. It's got to lose that reading again in short order. Last, Ethereum, which I seem to have skipped over yesterday. Had somebody write me, I didn't do it on purpose. Lower highs, lower lows still. You went down to these lower numbers, you're holding it. Gary Gensler starting to talk, remember he's the head of our SEC now, starting to talk about the extreme volatility here, SPAC funds. We'll see what the SEC's viewpoint on all this is. Remember, the bankers are under drilling. I don't know if you watched it today, but of course Elizabeth Warren can't wait to take center stage and say nasty things about everybody but herself. And I was just cracking up. I can't wait for her to drill these people because you know what to expect, and it's always going to be something that isn't pleasant. And that seems to be her nature. But she really let Jimmy Dimon have it and all the bankers, and I don't know that she's wrong. Okay, she was talking about these crazy fees for overdrafts and the like. I didn't realize that the banks took in $4 billion off of that. Is she wrong? No. So what I say is, I know she's going to drill them. I wait, and you get the entertainment of the day. So don't take that as a negative, Miss Warren. I expect that what you're going to do, you do, and you had a good point in this one, so I applaud you. All right, I'll see you all tomorrow, I hope, at 12:30 in our live webinar. You have a great day.